Hi everyone, my name is Vendik and you are welcome to the channel. Today we'll be discussing entry models. Okay, so we'll give you a high probability entry models. It doesn't have to be too much. Okay, so without further ado, let's get to the chart so that we'll show you most of the examples and then how it really plays out in real time. Okay, we will take a 3 bar reversal. All right, 3 bar reversal is one of my favorite entry models. Okay, so if a trade gets to my zone, all right, for me to trade off, okay, and then I got this pattern 3 bar reversal. Okay, 3 bar reversal. Okay, I think I should draw something like that. Okay, 3 bar reversal is something like this. Okay, we were uptrend. Let me make this to be a little bit thick so that you will see it. Okay, let's say we were uptrend. All right. Okay, let's say we were uptrend, and then we now have something like this. We now have something like this. We now have sort of a indecisive candle. Okay, so because this one will definitely open from here to open from here. Okay, and then we have a wick. Then the next candle, becomes bearish. Okay, we now have something like this. Okay, we now have something like this. Okay, so this is an example of a 3 bar reversal. Okay, we have a bullish momentum, we have another bullish momentum, but with a bigger wick, and the next candle now look we now have a bearish move. All right, so in the three of them, we tend to have a sort of a reversal with a wick. Okay, so this is typical example of a 3 bar reversal. So it's one of the best entry models that I do have. Okay, that always give me a high probability win rate. So when a trade gets to my zone, all right, I know in the channel we've discussed about zones where we talk about support resistance zones, fair value gap zones. What do they call? We have this in liquidity grab zones. Okay, so when trade gets to your zone, you need to be looking at a pattern like this. All right, so it always happen. All right, there are like three of them that I will really lay emphasis on this because those are the major three I'm using. All right, so when a trade gets to your zone, you need to be looking for a pattern like this. All right, you need to be looking for a pattern like this. So let's go and check it in live example. Okay, live example. Okay, so something like that, we have it here. All right, we have it here. If this was your zone, okay, you mark up. If actually this was your zone, let's say this was your zone, this particular order block was your zone, and then you are looking at to sell off of this zone. So what you should be looking at is a form of a 3 bar reversal. All right, a 3 bar reversal. So that was it. So you should be looking at something like this guy here, one, two, and this three. Okay. So why I will need to wait? That's why I said anything someone tell you, you need to confirm it. All right. This was a good reversal. All right, but the entry didn't enter right. Okay. We turned to come back and retest that particular zone before we go in. But at least this was our candle, indecision candle, and then we have a bearish move, but the bearish move wasn't strong enough to show that it's going to respect, but a subsequent two candles shows a bearish movement. Then we have another one, bullish movement, and we have another indecision candle. But look at this part, is the favorite part. You're supposed to this particular place is exactly what I was telling you. Okay, and this happens in this recent price action on GBP/JPY. Okay, so this could have been a sweet entry for you. Okay, so this is how to enter off it. Okay, you you enter here. All right, your stop loss will be above the swing high, and then you just target a 1:2. Okay, you just target a 1:2. That's why I said my trade always stay the whole day. Okay, a 1:2, a 1:2 will do something like this, and you tend to see that you are in a 1:2 will always do something like this, and the trade was a win. Okay, so this place being your zone, all right, you also look at another one here which is supposed to be another clear from the same zone, and you look at it. If you look at it again, okay, you look at the same pattern. All right, you look at the same pattern, 1 2 3. Okay, indecision candle did not show here, and then it starts consolidating. There was a fake breakout, a liquidity grab from this other zone. All right, then a pullback from that zone. Okay, so this is one of the entry models that I've discussed. Okay, so if you check every day, let's go to a lower time frame so that you will have most of these things there. All right, so any trade you take, you will tend to be seeing these stuffs happening almost all the time. Okay, happening almost all the time, happening almost all the time. Okay, so another live example, you don't really need to be searching for it, you will definitely see it. Okay, let's say this was your resistance, your zone. Okay, let's say this was your zone, let's say this was your entry zone. You want to buy off this liquidity grab. All right, then you will have something like that, 1 2 and a reversal. Okay, 1 2 and a reversal. It shows concrete confirmation that the market is actually reversing from your zone. Okay, so you really need to be looking at these patterns, and then you will see it was a clean trade. It was a clean trade, a very clean one. Okay, so you look at this, because please, and don't forget, always wait for the close of the third candle, because if you look at this candle very well, sorry, if you look at this candle very well, you will notice that at some point this candle, maybe it was still a bearish. Okay, it was still showing black. All right, this particular candle, it was still showing black. So, or maybe at some point it was showing a bullish move, but without a wick. All right, so just wait for the candle to conclude its move. Okay, this will give you a concrete confidence that the trade is going as you predict. Okay, so if actually you get into this trade, you will have something like this. Okay, always remember, because if the trade now goes below the swing low, okay, that means your prediction was wrong. All right, so then we are looking at 1:2 and 1:2 slap out very quickly. So these are little things you really need to put into consideration, and this was another one. So after we break the previous after we break the previous low, okay, we create a higher high. Okay, we now wait for another form of rejection from here, and then the same pattern play out itself again. We have a bearish move, indecision candle, and then a bullish move. Okay, from a bullish move, you'll be targeting something like this. Okay, if you are getting into that, sorry, if you are getting into that, you'll be targeting, this is where your close of the candle is, and this is your swing low, and then you will target a 1:2. Okay, a 1:2, and then it plays out very nicely. So these are clean conferences on how to enter a trade off. So we have a clean double trade for that day. Okay, if this was your trading day, you have a clean double trade for that day, and if you were holding this particular trade for the rest of the day, you will be having something like 1 is to 10. All right, so 1 is to 10 is a very big move. That's a more than enough trade. So this is one pattern, that one entry pattern you should be looking at. A 3 bar reversal, it's one of my favorite. When I see candle reverse at a certain zone like that, it's always one of my favorite pattern to trade off of. Okay, so this is one important entry models you need to have. Another one is an engulfing candle. Okay, and another one is an engulfing candle. So from your zone, even if it is not a 3 bar reversal, okay, you have a clean engulfing candle. It simply means, okay, the market is reversing, is respecting that your entry. An engulfing candle will look like something like this. Okay, one, all right, um, a two. Okay, let's just try and look at a three. Okay, a three candle like that, and then probably you now have, okay, a serious, a serious, uh, a serious bearish candle. Okay, you now have a serious bearish candle, and probably another serious bearish candle. Okay, so this is what an engulfing candle is. So as the name is engulf, it engulfed the previous 2 or 3 candles before. So if this pattern happens in your zone, okay, it's a clear that, okay, the market has shifted from that particular, it's going to reverse. That means your prediction is correct. So you look at engulfing candle. So let's go to the main chart and see if we have something like that. So if you look at everywhere, okay, I don't go far to look at this example. Anywhere you see a serious anywhere you see a serious a reversal, okay, you will tend to see one of this pattern, okay, play itself out. Okay, this one wasn't typical example of it, all right, but let's just scroll down. Okay, I think we are in a very nice area. Okay, and most of these things happens when the market is trending. Okay, most of these things happen when the market is trending. If you tend to be having a consolidation period, okay, the market tend to move without giving any form of signal. That's why I said, I personally, I don't like trading when it's consolidating, like yesterday and today. Okay, the market is just so indecisive. Okay, he doesn't decide what he wants to do. So I clearly stay out of the market, and I tell my community that me personally, I'm staying out of the market. Okay, so I don't want to hit stop losses that I didn't plan for. Okay, so um this is what I'm trying to say. Okay, let's scroll up a little bit. Let's see if we can get it. Okay, this was on October 1st of October. Okay, we have a reversal point here. Let's say this market just reversed from here. This is 1, 2, 3 candles, and then a clean engulfing candle. All right, 1, 2, 3 consecutive bullish candle, and a candle that engulf previous 2 candles. All right, so this is typical example of what I'm looking at. So this is a clean entry that you could have traded off of. Okay, is a clean entry that you could have traded off of. That was why I was saying that even news always align with price action. Okay, so I do look at my price action, and then I tend to avoid news days. Okay, or I trade very carefully with a trading stop. Okay, following up the news so that I won't get stocked out or my profit stop loss being hit. Okay, so those are it. Just that news always stays in line with price action. Okay, so immediately the news event, if this was where you were looking at it, okay, the first 15 minutes close on a news day, then you get into the trade. Okay, definitely you will still derive something out of it at the end of the day. Okay, I think this was close to almost how many percent move. So you need to really be looking at all these entry models. Okay. So engulfing candle is one of my favorite entry models that you should always look at. So that's another entry models. Fair value gaps. This one is very important. Okay. In this technique, you wait for the reversal to happen. All right. You wait for the reversal to happen. You will wait for it to close. Okay. Let there be a change of a change of character. Okay. A change of character in that particular trade. Okay. Okay. So you wait for you to have a change of character. All right. So this was one. So we were having a bullish trend and it gets to our zone. It gets to our zone, and then the next thing we have a reversal. Okay, a reversal. So from the reversal, you first of all wait to break below this particular zone. Okay, for you to have a clear change of character. So when we had this, we tend to drop a fair value gap. Okay, we tend to drop a fair value gap. So let me explain this. Okay, because I don't do based on imagination. If this was the trade you want to enter, immediately this particular black candle close, okay, you have break below this structure. That means the next candle supposed to be your entry. So let's mark up that place, and then any time frame you are trading, okay, when you get this pattern, you just need to mark up that particular zone, okay, that you want to. Okay, let me mark it up so that as we are going in, we will understand. So what you need to do when you get your entry signal, you step down. Okay, if you're in 4 hours, you step down to like 30 minutes. If you're in 30 minutes, you step down to like 5 minutes. Okay, so let's say you are in 15 minutes like this, so let's step down to like 5 minutes. Okay. Okay, let's step down to a 5 minutes. If you step down to a 5 minutes, this was the place I was discussing. Okay, okay, this was the place I was discussing. So in 5 minutes, you will notice that okay, market break structure, okay, with this candle and leave a fair value gap. All right, and leave a fair value gap here. All right, from this fair value gap, you now put your entry. Okay, half of the fair value gap, now put your entry for a sell position. That's why I said I don't play. Okay, I don't play chart for you to see. I do real life analysis. Okay, so this half of your zone, the fair value gap supposed to be your entry. Okay, supposed to be your entry, and then your stop loss below the previous swing high. Okay, then you target your 1:2, and this will be a clean chart. You see, the market leaves you, and then the next one, 10, because of there is a liquidity sitting here on this fair value gap. Market did not rebalance this place. So at all costs, okay, market will tend to come back to this zone to rebalance it. Even if you step down to 1 minute, you will see the stops very well. Okay, let's step down to 1 minute. Sorry, um, our analysis was coming from 15 minutes. That's why we are going this low. Okay, so 1 minute self. Okay, after creating this fair value gap, okay, it tends to come back and rebalance. It tends to come back and rebalance the gap that it drops. Okay, so this is how you enter off of a fair value gap. So you wait for the market to break the structure. Okay, you have a change of character. All right, that means it's really showing that you are bearish. So for high reward ratio, you wait for a market to drop a fair value gap, then you enter off of that fair value gap, and then your stop loss will tend to be very small. Okay, but it's a technique that always work. But if you are using this, you will tend to enter less trades. Some of the trade might not trigger, and some of them might trigger. Okay, so if you are using this, but these are actually the three major reversal pattern that I do use. Okay, these are the three major entry models that I have. Okay, so just keep it very, very simple and then work on what is working for you. But personally, I will recommend these three entry patterns, and then I can guarantee you have higher probability win rate in this. Okay, so remember, for a recap, remember no entry models is 100% sure. Okay, that is very, very certain. No entry models is 100% sure, but the ones that will give you higher probability win rates, these are the three personally I use. Okay, and it's working very, very fine for me. Okay, so you really need to look at these things and then check out the one that is very, very good for you. You don't need to use the three of them. You can just choose one, back test it, okay, for like 3 4 years ago. From 3 4 years ago, back test the whole of it, and then you will see how many percentage win rates that you have off of this or this entry model. So first of all, you do your technical analysis, you do your analysis, you do your um, top-down analysis and everything. Okay, so in your entry, this video is dedicated for you to enter without being inside a drawdown for a very long time, for you not to be in a drawdown for a very long time. So look at these things and back test it for yourself. Choose the favorite one you will use. There are a whole lot of entry models online, but personally, these are the three I look at. Okay, so the last one I just explained is, I think it's coming from ICT. They are the ones that globally use it, so it's not actually a kind of my trading pattern, but it works most of the time. Okay, when I really, really want to be a very, very sure of the trade. If the trade I don't have confidence enough on it, I tend to use it, because if it is not it, it will fail, and then I will not enter the trade. But if it is a trade I'm very sure of it, okay, if it is a trending trend and I am in line with the trend, okay, I will use just an engulfing candle, or I'll just use a three-bar reversal and I'm good. Okay, those are price action entry models, and they are very, very good for me. So I just enter off of that and I'm very good. So I believe this video really help you if you watch it up to this time. So just help me do the YouTube business. Just like, share, and comment. Okay, and then let's see you in another episode. Thank you.